Hey, it's the Profit Answer Man, Rocky Lalvani. Before we start, let's hear a Profit First success story from Scott Beebe from My Business on Purpose. Scott was on my other podcast, Richer Soul, to talk about having purpose in your life and business. He has all his clients use the Profit First methodology. This is what he found.
Like guaranteed profit. You got to do the work and you got to have more money coming in than's going out. But if you can do those two things, then it's guaranteed profit. We've had so many businesses that when it's done, and even after their first couple of months of doing their sweeps into those accounts, they're like, you got to be kidding me. I've been running my business for 8 years or 12 years or 2 years or 15 years, and I've never seen real cash profit. I've seen a number on my net income statement, but I can't withdraw that from the bank. That's not real money. That's money for my CPA to look at or my bookkeeper to look at or whatever. But in this case, they have real cash. And oh, by the way, your taxes are paid for when you do this.
Can you imagine the numbers your accountant talks about being real cash in the bank? It's possible. And it's the goal of this podcast to help you, the small business owner, understand your financial numbers so you can make better business decisions. We learn money mastery without all the complicated accounting mumbo jumbo using a simple system. Your accountant is too busy documenting your transactions and creating a rear view mirror of what happened. My guess is you don't even look at the reports they send you. If you're like most small business owners, you struggle with this. It's not your fault. We're not taught money in school. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Profits come first. Let's face it, without cash flow, you can't pay your employees, buy needed material, or pay your mortgage and support your family. I help you do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. In order to help you, I need to know where you're struggling and what you want to hear more about. So let me know. It's questions@profitanswerman.com. I read all the email and I'll answer a lot of questions on the show or respond to you personally. Today, we're going to talk about putting profit first into motion. Let's get this profit machine a-revving. First, we got to get everyone on board. So have a conversation with your accountant and bookkeeper to let them know what you're doing and why. Be prepared. They may fight back against you. But you have to remember, they're more interested in recording transactions than ensuring you are profitable. At the end of the day, you sign their paychecks, so make sure they listen to you. I don't do process work, but I can connect you with people who do if you can't get buy-in with your current providers. I'm also happy to talk to them, or you can just share the podcast with them. Now, I know you already got all your accounts created in the bank, correct? You open them up. Now we're going to start allocating. So we have our allocation percentages based on how we're currently spending. And we talked about this in episode 6. Go into your bank and set up nicknames for your accounts. So for income, profit, owner's comp, tax, and OPEX, you want to actually go in and change the names so it's easy to know which one is which. I also want you to put a longer description in there. So for example, for your profit account, I want you to name it profit, and then I want you to put your current allocation. So it might only be 1% or 2%, and you'll put 2 in the percent sign. And then inside of parentheses, I want you to put TAP and then 15%. Close parentheses. So what that is targeted account percentage. This way, when you're looking at this all the time, you'll look at your account, you go, oh, that's my profit account. I'm at 2%. I need to get to 15% over time. Do this for every account. So for your tax account, for your OPEX account, for your owner's comp, this is a constant reminder for you to constantly improve. So we're at day 0 and you have your current allocations based on your review. Now we're going to take baby steps. So look at the percentages you came up with And if you need to move them closer to the targets, just to adjust them by 1%. I'm going to put a link in the spreadsheet that we used back in episode 6 in the show notes. So if you haven't done it and you need to grab it and do it again, go ahead and do that. The reason we're only moving by 1% is because I don't want you to rush and fail. Chances are if you make too big a change too quickly, it won't stick. When we take baby steps, we celebrate victories and we keep moving forward, and you're more likely to succeed. You can always make a change of $10 based on $1,000 in revenue without screwing things up, right? This is little teeny baby steps. Now, I don't want you to feel bad if your day zero for profit is 0 for a percentage. It's normal. We're going to up it to 1%. Your owner's comp is the percent of sales that you get paid. If you set aside for taxes, what have you been setting aside? That was your baseline. We're going to also up those by 1%. And I also want to clarify the tax account. The tax account should not only pay your business taxes, it should pay the taxes on your income, which is what most business owners pay themselves after they pay themselves. We'd like your business to pay your taxes on top of that so that you don't have to. Again, this is a big bonus, but we'll get there. Now, if you haven't been setting aside anything for these, on day 0, it's 0%, and we're just going to move it by a little bit for the start. Everything else goes in your OPEX account. So we're going to start day 1 by adding 1% to profit, 1% to tax, and 1% to owner's pay, and deducting 3% from our operating expenses. Next, you're going to need to decide on your rhythm for paying out. Most people do it on the 10th and the 25th. However, some do it weekly and some do it monthly. It really depends on your flow. So this is how it looks. Let's say we have $10,000 in revenue that comes in. This goes into your income account. We sit down and we now take the money and we allocate it according to profit first. So this is how it looks. Let's say we have $10,000 in revenue that comes in. This flows into your income account. Now we take the money and we allocate it to our other accounts. And of course, we allocate profit first. So out of that $10,000, we would put $100 or 1%, if 1% was our number, into the profit account. Celebrate. This is real money. You are now profitable. Next, we take the allocation for your pay. Let's say that was 20%. We take $2,000, 20% of $10,000, and we put it into your owner's comp account. Celebrate. You're getting paid. Next, we take the amount allocated for taxes. Let's say it was 5%. We put $500 in the tax account because it's the government's money and you don't want to fool yourself and think you can spend it. Lastly, we put the remaining 74% into the OPEX account. As you can see, that's a lot of money going out for expenses. My goal is to motivate you to cut those expenses and to cut your spending. Now, move the money from your tax and profit accounts to your hold accounts at the other bank to prevent temptations. I don't want you to steal from yourself. I just want to say congratulations on taking this step because it's massive. You're on your way. Now we got to start cutting costs. Start asking yourself, do we really need that? You can probably cut 10 to 20% of expenses very quickly. You probably have some programs that you're paying a monthly fee for, but not using. Office space that no one's impressed by. Maybe you have an expensive car. I know this is painful, but it's a lot easier than growing an unprofitable business that eats away at all your time. I want you to take a look at your expenses and set a goal to cut them by 10%. It's going to take time to unwind from some of these. So we need to go up fast up front because the results may not be immediate. One big tip is to see what monthly costs you can downgrade. Are you paying for a service level on software that you don't need all the bells and whistles on? Can you cut the monthly fee on that? Same thing goes for cell phone bills or telephones or other things that you're constantly paying. So, based on the rhythm, mark your calendars and get ready to do your allocations. As I said before, most can do them on the 10th and 25th. Some do it weekly, some monthly, some on another schedule. Your bookkeeper can run all of this for you. From now on, when you look at your account to spend, I want you to look at your OPEX account. That's the money you have to spend. This whole thing that we're doing right now, it's part of creating systems in your businesses. By looking at the amounts going out, you're going to realize a few things. Number one, you probably spend on stuff that isn't necessary. Small things add up quickly when you have a bunch of them. You'll also be able to pay your bills on time, which can get you discounts, avoid fees, and cut interest costs. Remember, don't cut spending that will cause riots, like the coffee service. Be smart about treating your employees the way you want to be treated. Also, have them on board to figure out how to cut expenses. Give them a bonus if they can help you out. The more the people that are involved and the more you can gamify it, the more fun it becomes and the more everyone wants to run a lean, mean business that can survive turbulent times. I really want you to focus on how much is going out the door and how you can stop it, because it's coming straight out of your pocket. As you begin this system, you may find it's tough to pay your bills, and that's good. You're probably spending too much, but keep up with the rhythm you're building and build your financial muscles. Once a quarter, we'll take a distribution on the first day of the next quarter. So January, April, July, and October 1st, we take a quarterly distribution. The profit account is there to reward you for the equity you put into the business as a metric of bottom line business growth, for cash reserves to build your vault account, and it's also there to pay down debt and beyond. By the way, I hate debt. Yes, we're going to talk about that in the next chapter. There are times where it's good, but normally it's bad. On your distribution day, you take 50% of your profit account and distribute it. So if there's $1,000 in the account, you distribute $500. You are now issuing a quarterly dividend like a big company. Congrats. It's wise to build wealth outside your company as well. You can use this money to fund your retirement accounts as well, if that's what you want to do. Once you get your profit, celebrate. You deserve it. It doesn't mean you use all your profit to celebrate, but a percentage is a good idea. You can even start creating a list of things you want to do with your future profits. When it's time to pay the taxes, take the money from your tax account and pay it. Remember the one time we talked about Mike who had that 6-figure tax bill and he had the money in his account to cover it? You can sleep at night. Now it's time to do your increases. Every quarter we're going to increase by 1 to 2% for profit, owner's pay, and tax. And then we're going to reduce our OPEX by those same percentages. Again, it's baby steps. We keep taking little steps. We keep turning up the pressure. This is how I built wealth. It works. At the end of the year, when your taxes are finalized, if your tax account is off, adjust. If you don't have enough, then keep turning up the ratchet. When you have an excess, though, you can take an extra profit distribution from your tax account and move the percentages around. You can also use some of the excess from your profit account to cover taxes until you get your numbers right. It's always good to build that rainy day fund because we all get rained on. Next time, we'll be talking about destroying debt. So remember, you don't need more resources. You need to be more resourceful. Remember to focus on the bottom line. If you don't want to deal this, then just have me do it for you. It makes your life a lot easier. If you want to learn about living a life of your dreams, check out my other podcast, Richer Soul. Just remember, revenue is vanity, Profit is sanity and cash is king. Let's thrive and grow. Have a profitable week.